All right, welcome to The Explainer. Today, we're going to break down a major shockwave that just rattled one of India's most important industries. So, let's get right into it. Picture this. It's early 2026, third quarter earnings season, and suddenly, some of India's biggest IT firms, well, they report an unexpected hit to their bottom line. It was a real surprise, and it caught a lot of people off guard. And then, this number pops up. We're talking 1,289 crore rupees. And that's just for one company, Infosys, showing up as an exceptional expense. Now, you know a figure that massive doesn't just appear out of thin air, right? So naturally, this sent alarm bells ringing for investors and the market. Everyone's asking the same thing. Where on earth did this massive new cost come from? I mean, it wasn't like they had a bad quarter business-wise. Something else was definitely going on. And it turns out the answer wasn't some issue unique to Infosys. Nope, this was a nationwide policy shift, a ripple effect that was felt across the entire corporate landscape, and it was all because of a huge new set of regulations. Enter the new labor codes. You see, this was a massive reform that basically forced companies to account for a whole bunch of new financial liabilities, things tied to employee leave and benefits. All of a sudden, long-term costs that were kind of out there in the future, they had to be put on the books right now. To put it simply, the entire rulebook for how you calculate employment costs just got a major rewrite. Okay, so a major rewrite sounds big, but what does that actually look like on a balance sheet? Well, if you look at the numbers from the big IT players, they really tell the story. Let's put the two giants, Infosys and TCS, side by side. You can see a really clear trend here. Profits are down, and it's in the exact same quarter these new codes kicked in. For Infosys, profit dipped by about 2.2%. But look at TCS. They saw a pretty sharp 14% drop year on year. Ouch. And here's the key takeaway, right? This wasn't about them having a bad quarter or losing clients, not at all. This was purely about them having to absorb a sudden government-mandated operational expense. You could say the cost of doing business in India literally changed for these companies overnight. But, this whole story isn't just about corporate boardrooms and profit margins. A very similar shift was happening out on the streets, too. It was driven by the exact same idea, prioritizing labor welfare, and it was changing the day-to-day reality for gig workers. A perfect example? Just look at quick commerce companies like Blinkit. They were famous for their 10-minute delivery promise, right? Well, under pressure from the government, they started dropping it. Their slogan literally changed from being all about speed to being about variety and convenience. A huge shift. Now, this didn't happen in a vacuum. This change came on the heels of a nationwide gig worker strike, and you had politicians getting really vocal about the safety of these delivery partners. As MP Raghav Chadha put it, when you've got 10 minutes printed on a rider's shirt and a countdown on the customer's screen, that pressure is real, it's constant, and frankly, it's dangerous. So it's pretty clear there was this much broader national conversation going on about labor welfare. It was happening everywhere, from those high-tech IT campuses all the way to the gig economy on the streets. And when the Labor Ministry stepped in and asked platforms like Blinkit, Zepto, and Swiggy to cool it with the ultra-fast delivery claims, well, that sent a very clear signal about the new policy direction. So let's zoom out. What's the big picture here? What are we supposed to take away from all this? Because you have these two things that seem separate, right? A hit to IT profits on one hand and the end of 10-minute deliveries on the other. But they're actually two sides of the same coin. What this all points to is a major pivot in the economy. It's this new balancing act between corporate profits and, well, new standards for employee and worker welfare. For companies, it means new costs they have to deal with. But for the country, the whole conversation has shifted. It's now firmly focused on the rights and safety of the workforce. And that leaves us with a really big question looking forward. Are we just seeing some short-term pain here, a temporary shock to the system? Or is this the beginning of a whole new chapter for Indian business, one that's maybe more sustainable, but also more costly? And you have to wonder, will this ultimately lead to a more stable and equitable economy in the long run? So there you have it. That's our breakdown of what we're calling the labor code crunch. It's definitely a complex issue, and as you can see, its impact stretches from the highs of the stock market all the way down to the delivery arriving at your front door. Hey, if you found this explainer useful, do us a favor and hit that like button. And we really want to know what you think, so drop a comment below. Thanks for watching, and we'll see you in the next one.